ASEAN summit gets underway on Tuesday. Ahead of that, we'll be speaking to the University of the Philippines Asian Center about the biggest sorts of frustrations between the bloc and China. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg's learned that the distressed Chinese builder Country Garden has told creditors that it's made a coupon payment due Monday for a ringgit-denominated bond. Late last week, Country Garden also won approval to extend a separate maturing yuan bond, helping it avoid a first-time default. Bloomberg Intelligence China property analyst Christy Hung joins us now from Hong Kong. Christy, so it looks like they're barely managing to stay above water. What's next?
Right. So Country Garden is absolutely not out of the woods yet. The ringgit bond coupon payment is still relatively small in size. And what matters more is it going to able to be repay the dollar bond coupon payment in the next 2 days? That's the end of the grace period in order to avoid a default. And I think for Country Garden, even if it does, there's still sizable bond maturities coming up in December and January, and that necessitates the need of an offshore debt restructuring. You know, for Country Garden, you know, if there's any signs of repayment stress, it just suggests a downward spiral on the liquidity because of deteriorating sales as well as refinancing.
What about the fresh wave of policy stimulus? Is that going to meaningfully help at all?
Right. So for the central bank, you know, introduce a minimum down payment requirement that's uniform across the country. That's good news for China's Tier 1 and strong Tier 2 cities, but that is just 31% of China's housing market. And I think what matters more is for the smaller cities, that's accounting for 2/3 of China's housing market. A lot of the down payment ratios has already raised to, 20%, raised down to 20% for first homes and second homes at 30%. So that's very limited room for extra easing in those cities. And, if we look at developers like Country Garden, Agile, most of the land bank are in smaller cities, suggesting that their sales are not going to benefit from these kind of policy stimulus.
Yeah, how have sales done so far, not only for Country Garden, but other developers as well then?
Right, so for the month of August, sales is still down 34% year over year, and we expect that kind of decline to persist through the rest of this year. With the policy stimulus, it might help arrest the decline, but not turn around sentiment. I think it doesn't matter how much the government is trying to make it easier for people to buy homes. That doesn't overcome a lack of confidence from the household's perspective. That's confidence on the home price outlook, on the economy, and on the health of the property sector.
Our Bloomberg intelligence analyst for China Property, Christy Hung there. Well, Chinese President Xi Jinping has vowed to continue opening up the world's second largest economy while pursuing a development path on the country's own terms. Let's bring in Bloomberg's Asia Economy Managing Editor Malcolm Scott here in Sydney. We've heard this kind of narrative many times before, haven't we?
Yeah, we have, but it's good to hear them again. Reassurance from Xi Jinping that the Chinese economy remains open to Western business. Of course, there's a lot of skepticism about that, especially with the regulatory crackdown on tech, and the slump in foreign direct investment into China speaks to that, and the real deterioration in conditions. So some welcoming words from Xi Jinping. They certainly can't go astray. Whether there's anything really new here, it's hard to say. There were some specifics about the service sector opening in areas like telecommunications and tourism. Maybe we'll see some follow-up details on that come in weeks and months to come. But look, that's very unsure. As the European Chamber of Commerce said last month, there's a real promise fatigue sort of feeling going on among the Western business community in China.
Malcolm, what are we going to see from China's August trade numbers later this week?
Look, they're still going to be fairly miserable, negative for both imports and exports. The consensus among the economists we survey show that some of those declines, however, on both fronts may moderate. Bloomberg economists' own team, though, they're a little bit more bearish on the outlook. They think that the export situation is still going to look fairly miserable. So we've got this big, giant growth driver in property that's spluttering, and at the same time, this big export engine is also spluttering. Not good news for confidence in China's economy. But if we do see some sort of baseline, some easing in declines after we saw that Caixin report on manufacturing come back positive on Friday, maybe this will start to at least engender some hope that perhaps the worst is over, maybe even on both fronts.
Malcolm Scott, Bloomberg's Asia Economy Managing Editor there. You can get a roundup of all of these stories that you need to know to get your day going in today's edition of Daybreak. And Bloomberg subscribers, go to Day Go, also available on mobile in the Bloomberg Anywhere app. You can customize your settings so you only get the news on the industries and the assets that you care about. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Welcome back. Here are some of the corporate developments that we're tracking. India's richest banker, Uday Kotak, has resigned as managing director and CEO of the lender he founded, Kotak Mahindra Bank. His resignation on Saturday came earlier than expected, and in the letter, the billionaire cited personal reasons for the decision. Deepak Gupta, the joint managing director, will take over as interim CEO until the end of this year. Saudi Aramco is reportedly considering selling $50 billion in shares in what could be the largest offering in capital markets history. According to the Wall Street Journal, the new offering will go up on the Saudi exchange to avoid any risks associated with an international listing. The report cites sources saying the timing of the deal hasn't been confirmed, but it could happen by the end of the year. Mercedes is intensifying its bid to challenge Elon Musk's Tesla. The automaker has unveiled an EV concept car with a longer range than any Tesla model on the market. The sedan, which is near production, can go over 750 kilometers on a single charge. Mercedes is under pressure to bolster its lineup following disappointing sales in China, which forced the firm to cut prices on some models. And Germany's biggest car show is getting underway in Munich, where car makers are showing off their next-generation models in the increasingly competitive EV space. Bloomberg's Oliver Crook reports.
We're here in Munich at ground zero of the Battle of the BEV, the battery electric vehicle. BMW, Mercedes, all launching their new concept cars, showing them to the market really for the first time. For these legacy automakers, really proving that they can stay ahead in an industry that is in full evolution. For the Chinese, if the Europeans are in defense, they're on offense. They're here, BYD, Zeekr, NIO, Xiaopeng, all to show the European market what they've got to offer, really working to break in to the international stage. And let's not forget about Tesla, revamped Model 3, cutting prices again, that price war really turning up pressure for a lot of these legacy automakers that don't necessarily know how to make that kind of money on EVs. We'll be speaking to the European CEOs. How do they stay relevant? How do they stay ahead? And for the Chinese, how do they break in?
Bloomberg's Oliver Crook there at the IAA Auto Show in Munich. This is what we're watching when it comes to SoftBank stock in focus at the moment. We're actually seeing a little bit of downside. The SoftBank said to have lined up some pretty big backers, Apple, Nvidia, strategic ARM IPO backers there. Some of the biggest customers of ARM now being positioned as strategic investors for this highly anticipated IPO from the chip designer. Intel is another name that's being bandied about as well. Let's get in some more details with our executive editor for Asia Technology, Peter Elstrom, joins us now. Peter, what do we know? I mean, we have been watching and waiting for details of this IPO for so long now.
Yeah, it is finally here. We are finally on the verge of ARM beginning its roadshow. That will kick off this week. And of course, SoftBank has looked at a number of different options for this business. The chip designer it bought for $32 billion has been a high priority for Masayoshi Son for a while. He did try to sell it before to NVIDIA. That deal ended up not proceeding because it wasn't able to get regulatory approvals. Customers were also kind of unhappy with it. So now he is proceeding with this backup plan of taking the company public, and it has been a while. He's taking it public in a market that has been quite strong for chip stocks, especially stocks like NVIDIA. As you pointed out, now ARM's customers are putting some money into this deal. You have strategic investors, including NVIDIA itself, ARM, Intel, Samsung, a bunch of others. This is kind of a vote of confidence in the offering as SoftBank prepares to take it public. The valuation for the company they'd been looking at as high as $60 to $70 billion. Now it sounds like it's come down a bit since then to $50 to $60 billion. But the real test is going to be this week as they go on the roadshow, they talk with investors, they see what kind of feedback they get, and they figure out whether they're able to price it a bit more at the top end of that range or the lower end of that range.
Peter, does it help that they have such high-profile backers? And what does this mean for ARM? And also, what does it signal about the rest of the tech industry?
Yeah, it is a vote of confidence to have companies like Apple and Nvidia putting money into this business. SoftBank is not going to sell a lot of the equity here. They're looking to sell about 10%, according to what sources have told us. So SoftBank is still very much going to be the controlling shareholder, even as it goes public. The real challenge ahead for ARM is that it's been the dominant provider of these chip designs for smartphones. Its designs are very low power. That's worked very well for companies like Qualcomm that are making chips that can't use that much power on a mobile device. Now ARM is trying to move up the value stack to do more with cloud computing, with artificial intelligence, with data centers that provide all sorts of services. That has been more of a challenge. That's really the home of companies like Intel and Nvidia, which are very powerful chip players, and they use a lot of power, and the power saving characteristics of ARM's designs are a little less critical in those areas. So SoftBank with ARM is trying to expand into those areas, and they need to show that they can get the kind of revenue growth that they would get if they're able to expand beyond that smartphone market that they've dominated for so long.
Peter, how much does this help for the broader, I guess, existential crisis we've seen at SoftBank, right? How much does it aid in the turnaround?
Yeah, there have been a lot of challenges at SoftBank. Of course, the challenges have really stemmed from Masayoshi Son setting up this vision fund. Originally, $100 billion that he was going to invest in startups. It ended up going to more than $140 billion. And he made a number of bets that really have not paid off. WeWork now is close to bankruptcy. They put in more than $10 billion into the company. They've had a number of other problematic investments in startups. So ARM is a chance for Son and SoftBank to recalibrate a little bit of that value, to get some cash to be able to go out there and make new investments. The company has been accumulating cash in recent quarters. It's been doing a bit better recently. It's also paid down some of its debt. So its balance sheet is looking pretty strong at this point. If it can raise some money from ARM, if it can get this into the market at a decent valuation, then that will give Masayoshi Son some dry powder to be able to go out, and probably he's going to cut some more deals.
Executive editor for Asia Technology, Peter Elstrom, there with the latest on that ARM IPO. Take a look at how European futures are trading in the early Asian session after we saw European stocks rallying last week and posting their best week since mid-July, really taking hints from where the U.S. headed, with that data suggesting that the Fed might be able to pause rate hikes and pause its tightening. And this, of course, the sentiment has been a bit subdued, Heidi, this week, given data also showed that drop in China's manufacturing activity, not to mention that the euro area inflation numbers stopped slowing in August. We do have more to come on Daybreak Asia. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time
to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Take a look at how Asian markets are trading at the moment. We're seeing upside for most markets, with the Nikkei being led higher by real estate and energy stocks. And this, of course, as it continues to extend its longest winning streak since May. We're up for a 6th consecutive session. The Kospi is also gaining ground. We are expecting South Korea's inflation numbers later in the week, but we might see that 6-month slowdown in CPI trend in August being broken. The Korean won also holding steady at the moment at that 13.21 level, maybe a little bit of pressure against the US dollar. We're watching the ASX 200 headed towards that RBA rate decision. The expectation is for Philip Lowe's final rate meeting to be a hold. Kiwi stocks, though, seeing a little bit of pressure, and this, of course, coming as U.S. futures remain pretty muted at the moment. We are on a long holiday weekend here in the U.S. Bloomberg's latest MLife Pulse survey has found that the U.S. stock market rally could be strong enough to withstand another leg higher for bond yields. MLife Strategies' Mark Cranfield has more on the survey results. And Mark, of course, we had the best week since June for the S&P 500, and Friday's trading session was pretty interesting because really Treasury yields and were down first after the jobs report, then they were up because of manufacturing data, and that really pressured the stock markets. But what are we hearing from the survey?
Well, the Friday being directly before a long weekend, some of the moves are probably a bit exaggerated. So I think you can not take too much from what happened there. But what the survey generally shows is that investors are pretty sanguine about rising Treasury yields. They don't see it having a huge impact on the stock market. So people were asked if Treasury yields in the 10-year rose to 4.5%, what sort of impact would that have on the S&P 500? And people generally thought that the losses would be contained to less than 10% in the S&P 500 if that was the case. Of course, if there's some weakness starts to appear in the equity market, because of high yields, it would probably be in the tech sector and in some of the real estate sector where the losses would be a little bit more pronounced. But then, of course, on the flip side, the banking sector would probably do pretty well. So overall, there certainly would be rotation. But the general view is that Treasury yields are mostly priced in, and that from here, we're not going to see too much concern to the equity market going forward.
Is the bond market still going to be, I guess, a source of pressure, or are we starting to see a little bit more resilience when it comes to the stocks bond correlation?
Yeah, the people are still pretty happy with this 60-40 portfolio setup. That people were questioning it last year, whether there was still a future for this familiar way of setting up a portfolio when bonds and equities were falling at the same time. It certainly seemed to jeopardize whether this still had a good place in general portfolios. But if you look at the way things have progressed since then, the equity market has been much more resilient. And even with the Fed raising rates to the highest in a couple of decades, it hasn't done extreme damage to the market. And of course, there have been the positive stories like AI, which would keep everybody very interested in certain parts of stocks as well. So overall, and as this survey also confirms as well, people still generally are in favor of the 60-40 portfolio, although maybe not as strongly as they were 10 years ago. But certainly it still looks as though it has a big place at the center of most people's strategy.
Bloomberg's MLive strategist Mark Cranfield there with the latest commentary. And you can, of course, get more on this story, all the day's trading analysis on our Markets Live blog. That's on the Bloomberg at MLive Ego. You can get a market rundown in just one click, and there's commentary and analysis from our team of expert editors so you can get exactly what's affecting your investments at any given stage. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Thursday, Bloomberg's Mike McKee sits down with New York Fed President John Williams at Bloomberg's Market Forum for an exclusive interview. Does he see more rate hikes? How soon for cuts? Find out Thursday at 3:30 p.m. Eastern, only on Bloomberg.
Welcome back. Let's get you some top geopolitical news from around the world. Italy's foreign ministry is on a 3-day visit to China, discussing the possibility of his country leaving the Belt and Road Initiative. Before heading to Beijing, Antonio Tajani told us the investment pact has fallen short of expectations.
The message is very clear. We want to work with China. It is a competitor, of course, for us. We want to work in the Chinese market. We are ready for Chinese investment in our country, but we need a level playing field.
Italy's membership in the BRI has turned into a dilemma for the Meloni government after making it an outlier among the G7. It must decide by the end of the year whether to renew its involvement in the program that was once the backbone of President Xi Jinping's efforts to deepen China's economic ties around the world. Ukrainian President Volodymyr Zelensky will replace Defense Minister Oleksiy Reznikov. This is after allegations that the department bought military supplies for inflated prices. Reznikov, who has denied the allegations, will be replaced with Rustem Umerov, who has been involved in war-related talks. The reshuffle comes as Kiev gears up for its counteroffensive against Russia. Take a look at how U.S. futures are trading at the moment. Not a lot of movement on this holiday weekend. We saw the U.S. stock market rally in the New York session on Friday, but the rally sort of faded towards the end of the session as we saw bond yields climbing. We had a strong manufacturing report offsetting jobs data optimism. We had that jobs report showing a labor market undergoing sort of a controlled cooling, solid hiring, slower earnings growth, and more people returning to the workforce. We are seeing Russell 2000 futures unchanged, but perhaps under a little bit of pressure. This, of course, after we continue to see is a dollar stronger, hitting a 3-month high, Heidi.
Well, China's outrage over Japan's release of treated wastewater from the Fukushima nuclear plant is casting a shadow over prospects of improved relations. Let's get the details now with our Bloomberg Economics. We're going to get some more details on that. And that is really one of the issues casting a shadow over this week's ASEAN summit in Jakarta. That leadership meeting is to get underway tomorrow, Sherry. So, it comes at a very interesting time when it comes to perhaps more expectations of accelerated growth across ASEAN. We know that some of these economies are doing a bit better. At the same time, a lot of them also have heavy exposure to the Chinese slowdown. And then you overlay some of these geopolitical tensions as well. It's a pretty difficult time for leaders to be meeting at the moment. Let's get some of these details when it comes to particularly these ongoing tensions between Tokyo and Beijing. Isabel Reynolds joins us now out of Tokyo. So the Japanese Prime Minister, China's Premier are both attending the ASEAN summit this week. Are we going to get a one-on-one?
That seems highly unlikely at this point. I think the nearest we will get to that is where we get what's called the ASEAN +3 summit, where you have all the ASEAN leaders plus Japan, China and South Korea. And normally this would be a kind of a formality, but I think one of the concerns this time going forward is that China may use this opportunity to kind of berate Prime Minister Kishida over the Fukushima water release in front of all these regional dignitaries, which would be a rather unfortunate and embarrassing situation for Japan. Of course, Japan will try to rebut these claims. It's been campaigning for months and even years to show that this move is something that's standard practice in the nuclear industry, and that it won't pose any significant harm to anybody or to the environment. But China does not accept that. So it's going to be a long battle, I think, to try to restore ties between these two sort of Asian economic giants.
And also the ASEAN summit coming just days after China released that new map indicating the areas that it sees at its own territory. What are we expecting from the summit?
Yes, well, it seems rather extraordinary timing for China going into this summit. It could have been an opportunity for China to look more involved with Southeast Asia, given that President Joe Biden of the US is not coming this time, which has been seen as a disappointment for some. So it could have been an opportunity to kind of improve ties with Southeast Asia. But instead, China's chosen this timing to issue this new map to reassert its claims over parts of the South China Sea that a lot of other Southeast Asian countries also claim. And so we saw an outcry last week from the Philippines, from Vietnam and so on, saying, oh, we don't accept this. And we can expect those issues to be raised, I think, with Lee, which could mean that his first attempt at this ASEAN summit may not be particularly auspicious.
US President Joe Biden won't be present at the summit. How is that likely to be received?
Right, we've all seen a sort of widespread issue of complaints in the media about this. Instead of Joe Biden, we have Kamala Harris, who will be, the vice president will be in place. And, you know, she does have a very full agenda while she's there. She's definitely going to reach out to people as much as she can. But with the best will in the world, the vice president is not the president. And Jakarta would have wanted the kind of glamour and the prestige of hosting the president as the chair of the ASEAN summit this year. So it is going to be a disappointment, I think, to some degree. There have been rumors about whether this means something about poor ties between Indonesia and the US. That's not really clear. But I think it will at least show that the US isn't as fully engaged in the region as it might be, even though the US side has made clear that it's reaching out on a bilateral basis to a lot of countries, including the Philippines, and with President Biden going to Vietnam shortly.
A politics reporter in Tokyo, Isabel Reynolds there. Let's bring in, for some more analysis going into this set of meetings, Richard Hajarian, who's the senior lecturer at the University of the Philippines. He joins us now from Jakarta. Richard, great to have you with us. And we've just talked about President Biden's absence, of course, disappointing for the host nation. But also, we have the situation where, of course, Xi Jinping will be absent from that as well as going into the G20. We'll be watching that as well. What's the dynamic that is most interesting to you and the issues that kind of top the agenda for you for ASEAN?
Well, interestingly, President Biden will be visiting Vietnam, which is an emerging strategic partner for the United States in the region. So you have two former nemesis really, bearing the hatchet and trying to build some sort of a robust partnership in light of shared concerns, especially over China, but also shared economic concerns. So that's why I think some people were slighted here in Jakarta because they were expecting Biden to also visit Indonesia, not only for the ASEAN meetings, but also for some high-level discussions with President Joko Widodo, who is on the way out in his legacy months. Now, I think the overall understanding in the region is that the United States is in a catch-up mode. So it's true that Xi Jinping also is not attending, but people are expecting the United States to put something constructive on the table, literally constructive. It's true that China's Belt and Road Initiative has not been meeting its targets over the past few years. In countries like the Philippines, we have more of a pledge trap than a debt trap. But the reality is the United States doesn't have any kind of a counter proposal, and it's Indo-Pacific Economic Framework. To be honest, it's very ASEAN-like, a lot of symbolism, not much substance. So we're hoping for the United States, whether it's Kamala Harris or top American officials in the coming months, to give more concrete details on how the Indo-Pacific Economic Framework is going to move forward. As far as ASEAN itself is concerned, it has a number of crises in its own backyard, from the festering civil war in Myanmar, which is now raising discussions about potential expulsion, full expulsion of the junta from the regional body, to new members like East Timor, not to mention, of course, the South China Sea, which is a big issue for the Philippines, Malaysia, and Vietnam. And President Marcos Jr. is going to be in town and is going to push hard for the centrality of that issue in the regional discussions.
Yeah, how do you expect that to be played out?
Well, I think Indonesia is responding to this on two levels. On one hand, it is at least claiming that there has been some sort of breakthrough in the negotiations of the Code of Conduct, a legally binding Code of Conduct in the South China Sea. But honestly, as someone who has been observing this and writing on this for the past decade, and this is something that was raised, just a year, after I was born, in the late 1980s, I'm not very optimistic about really a real breakthrough on the Code of Conduct front. Nevertheless, interesting things are happening because Indonesia right now is pushing for the first ever all ASEAN naval drills. It was supposed to be in North Natuna Sea, which is close to the South China Sea. Cambodia and some China-friendly countries push back against that, so it will be in South Natuna Sea, from what I understand. But nevertheless, that's a move in the right direction because ASEAN has to show a common front and show more operational interoperability. But also on the sidelines, expect Philippines, Vietnam, expect Philippines, Malaysia, Indonesia to also discuss their maritime borders and how to resolve those maritime borders based on the United Nations Convention Law of the Sea.
How much is the fact that the leaders of the two largest economies are not attending this ASEAN summit? How much is it from them lacking this strategy towards Southeast Asia or just the relevance of ASEAN itself?
Yeah, I think as far as ASEAN is concerned, ASEAN centrality is more of an aspiration, to be honest, if not some sort of pretentious or self-proclaimed role. It's something that we have to gain. It's something we have to earn. And the reality is that what you're seeing nowadays is more trilaterals. US, Korea, Japan, more quadrilateral, India, United States, Australia, Japan, but also Philippines, Australia, United States, and Japan. And I think the emergence of this minilateral, security-oriented, new Cold War-ish kind of blocks, not to mention expansion of the BRICS, they tell you something about diminishing confidence in ASEAN in terms of playing its role. And Indonesia, in fairness, I think they really realize that. But they have to make some big moves if they want to put the regional body on an even keel in the coming months.
Do you expect that to happen? What's next for the group?
Well, I mean, this is legacy months also for President Joko Widodo, and Indonesia had a very successful year last year as a rotating president of the G20 summit. I think they defied a lot of expectations. So I won't be surprised there would be some interesting mini breakthroughs here and there. But I think the increasing reality is that ASEAN 10, as 10 members, you cannot really get much out of that if they're going to continue to operate based on unanimity, not really consensus, but unanimity. That's how they operate on very sensitive issues, whether Myanmar, South China Sea, and so on and so forth. But I think more and more unilateral coordination among key ASEAN countries, between key ASEAN countries and external powers, that's the way forward. But I think the Indonesia way would be to spin this as a more economic-oriented summit and meeting and year, because the theme is actually ASEAN as an epicenter of growth. For the first time, we're growing faster than China in a generation. So I think they'll try to put a spin on this by overemphasizing the economic front, but more unilaterally dealing with the geopolitical issues.
Richard Haydarian, good to have you with us, senior lecturer at the University of the Philippines. We have more to come on Daybreak Asia. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Tens of thousands of homes temporarily lost power in Taiwan as Typhoon Haikui made landfall on Sunday afternoon. The storm's radius enveloped much of Taiwan, bringing heavy rain and wind to the island and disrupting power to more than 40,000 households. Authorities had earlier shuttered offices and schools and canceled more than 200 flights. Haikui was the first typhoon to hit Taiwan directly since 2019. Also, the cleanup continues in Hong Kong and along the coast of Guangdong after Super Typhoon Saola swept through over the weekend. Bloomberg Intelligence estimates the total damage bill from the two storms could top $1 billion. Let's get more from insurance analyst Stephen Lam. Stephen, so how destructive were Saola and Haikui compared with other storms in recent years?
Yeah, good morning, Heidi. Sherry. So the losses, it seems, could be less than what we had anticipated. So the key here is that for Saola this time is that even though it's closer and the wind is stronger than Manku in 2018, we noticed that the flood damage is actually much less than Manku. So that's why we will bring down the estimate. I think at the current observation right now, we're thinking about tens of millions of US dollars in terms of losses. So that would be comparable to what we had in 2021 in Lion Rock. Most of the damages that we have observed were mostly in broken glasses, some scaffolding that went off, solar panels that blown off the roof, hundreds, 1,500 fallen trees across the city so far.
Are insurers seeing above average typhoons this year?
Yeah, absolutely. To be honest with you, so in China right now, the fourth one is called Haikui. That's already way above the annual average of 3.2. Now, mind you, we're only in the middle of the season right now, just early September. Typically, the typhoon season can last through end of October, sometimes into November as well. Closer to Hong Kong here, we noticed that the signal 10 for Saola is actually the fourth one in the past 15 years. And compared to the prior 15 years, Hong Kong only needed to hoist typhoon signal 10 for one time in the prior 15 years. So the signal 10 basically means hurricane force with a wind speed of about 118 kilometers per hour and above.
So how prepared are insurers then for this spike in typhoons?
Yeah, so I think that's another key point to note. The city, Hong Kong, Macau, and southern China are way more prepared due to the lessons learned from Hato in 2017 and Manku in 2018. So a lot of the businesses, small shops, with early signal, they would guard up their shops and put up boards to avoid flooding situation. Now, however, with the higher frequency and the large losses in the last few years, the insurance price premiums have actually gone up as well. So we insurers are charging the direct insurers more during the current season. So we can see that some of the direct insurers actually have lower protection than prior years. So they're more exposed in simple terms during the current typhoon season.
Stephen, we know that extreme weather is likely to probably get more common, heat certainly for this year as well, but we've seen in the US some major insurers actually ending certain coverage for climate-related risks. Is this something that will become more common?
Well, I think in this part of the world, actually, we should see quite the contrary, because Asia, the insurance penetration, the insurance protection is actually much lower than North America. Based on our study, is that on average, any storm or any large natural catastrophe, only 15% of the economic loss is covered by insurance, versus about 50% in the United States. The key here is about the public education, which the city in Hong Kong and China has been pushing quite hard in terms of increasing the insurance penetration.
Bloomberg Intelligence insurance analyst Stephen Lam there with us. Taking a look at how markets are trading, we are seeing broad upside. Of course, it is that long weekend scenario in the US, but here in Asia on this Monday morning, we're seeing a sea of modest gains, if you will. The Nikkei 225 up by just about 0.4%. We are seeing upside here in Australia as well, going into RBA decision week, expecting a third consecutive hold from the central bank here. And broadly, we are seeing regional sentiment just lifted as traders are really considering that US jobs number on Friday, really supporting that optimism that a soft landing scenario is perhaps more possible than before, and that the Fed is nearing the end of that tightening cycle as well. That is it for Daybreak Asia. Our markets coverage continues ahead of the start of trading in Greater China. This is Bloomberg.